Hi guys, welcome back. So today it was another day that was destroying a lot of small caps and especially the tech stocks. But unlike previously, the sell-off was mainly driven first by the sell-off from the mega cap. As I said, after the earning, it's a lot of sell-off the news happening, especially for Apple. For a mega cap like Apple to drop 3.5%, it's a lot. At some point, it was dropping 4% with volume too. We start with the best looking one, which is Dow Jones. It closed with the hammer line, shows that it got supported by the 5, 10 and 20-day moving average and bounced back up quickly. And it raised in the end a little bit with some volume. In the middle of the day, it was selling off quite a bit, at some point dropping as much as 1% quite quickly, and then kind of formed a head and shoulder bottom. So then it became a support and started to bounce back up. Did a little bit shaking first and then uptrend from there on. So it kind of formed a little bit bottom here. Yesterday we said the volume was not enough, but today the volume kind of make up for the weak volume of yesterday. So right now it looks like Dow Jones can still break this area of consolidation to make a new high. What has been pulling up the index were mostly not the tech stocks, like Caterpillar, for example, for infrastructure, JP Morgan, banking, Johnson & Johnson, mostly value stocks. And on the other hand, what dropped the most is Apple, Salesforce, Microsoft. And then on the other hand, Nasdaq had quite a little bit of selling off, dropping 1.8% in the closing, but at some point dropping near 3%. So at noon, the sell-off looked quite strong. And most of the day it was moving below the average line, and in the end it closed above that slightly. The rebound is not so strong, so let's see on the daily chart. Today it was dropping with volume, and in the morning right away it had a big gap down, breaking the support of 13,700 to 800 right away, and then continue the sell-off, breaking the support of 30 and 60-day moving average, and then got supported at exactly here on this day. Let's see, it was April 1st when it was gapping up strong and continue going up, making the high of 13,487. And today at noon we got supported by this 13,485. So it was exactly the highest of this day. But we look at the volume on this day, it's not so strong compared to the selling volume on this day. So because the selling volume is stronger than the buying volume, then this support may not be as strong. So the next support would be here at 13,278. If we look at what dropped the most today, it was Apple. In terms of the mega cap, for now it looks like it's supported by this 120-day and 60-day moving average that happened to be together at 127. So we close above 127, barely. But for the selling pressure to be so strong, it's looking likely that we can break the support. I think the support here at around 123.5 to 123.6 might be stronger support here. So I don't know if it would rebound tomorrow, but I do think if it can drop to this support and bounce back up, it would look better like this. So that's why I think Nasdaq can still have some room to drop. If you look at Amazon, you see all the past 3 days, it has been massive selling off compared to the volume from the previous few months. So you can compare the selling pressure here. The selling volume is even much bigger than the selling volume in the correction in March. So this would usually means it would reach a lower bottom, or it would take quite some time to consolidate to recover. So the big sell-off was first caused by Yellen's speech about interest rates. She thinks that the interest rates may need to rise modestly. And because the market already priced in the fact that the Fed had always been saying that interest rates would not rise until 2023. So her speech really created a black swan. She thinks the economy might be overheating with the new $4 trillion stimulus package. So this has caused quite some sell-off for the tech stocks, mainly because it was already under the attack from the rise of the bond yield and the worry of the fluctuation, even though the Fed had been reinforcing the interest rate would not rise until 2023. So today we had a kind of a black swan news and was a major reason for the tech stocks to sell off. That's why we saw the VIX going up strong at some point, spiking to be up 19%, near 20% during the day. It was also when the index had bottomed and then bounced back up. It slowly went back down. So it closed above only 6% in the end. So I expect the VIX to be under control from here. The Russell 2000 dropped 1.19% today, and it got supported by the 30-day and the 60-day moving average. But it broke the 10 and 20-day moving average in the morning. But I think the Russell 2000, it's looking better than the Nasdaq right now. As I have been saying for 2 weeks already, I think the mega cap, the Nasdaq, need to cool off first, while I expect the smaller caps to run for a while. So after the strong run of last week, while the big index were all resting, now it's just backtesting the supports and might do some consolidation here. And we can see that the volume, the selling volume, was much smaller compared to Nasdaq and all the mega cap. Different than Nasdaq, today's selling volume was not bigger than the buying volume last week. So I think there would be a good chance that we can get supported here and then consolidate before making another move, hopefully breaking out to the upside. So I would expect some small caps to have some rebound. But right now, I think the smart money is quite sneaky on rotating different stocks between the small caps too. One day this, one day that. So we really have to be careful and hopefully we can catch the right rhythm. And the worst thing we can do, I think, is to sell off the ones that's dropping and chase the ones that are flying, because we don't know, maybe the next 1 or 2 days or few days it will rotate to someone else. On the other hand, the Chinese ETF KWEB dropped 1.7% today, similar to the QQQ of 1.8%. But luckily it was dropping without volume. We can see during these few days of dropping, the volume got less and less. So the selling pressure is less. But if you look at QQQ, you see today's sell-off has spiked of volume. Same thing with Nasdaq. These few days, the dropping had increase of volume every day. 2 weeks ago, I said that I expect the Chinese stocks to rebound and would outperform the Nasdaq. And it did have a strong rebound. And then followed by the sell-off. Even though the Chinese market, the Shanghai Composite, is not even open these few days, they're still on the long holiday. So the sell-off of Chinese stocks were a lot caused by Biden's speech last week to encourage investors to buy American. So recently it's been quite difficult for Chinese stocks. First the rise of the bond yield, and then further down by the SEC law, the US-China affairs getting worse, and then the chip shortage, and now the Buy American. So many attack, and it's still staying above this support line. Then I am already quite impressed with so much attack going on recently. If this support continues to hold, then we might have some double bottom or triple bottom of the stocks. So about EH, yesterday I did not mention that the company announced to delay the financial of the year of 2020, and that's why it was causing the sell-off, even though there was no news about it. A lot of comments and a few of my Discord members had brought it to me that the company needed to delay in filing its year-end financials, and it had been the bears in charge on Monday with the share sell-off. It was the news delivered by eHang last Friday after the closing of the market in an SEC filing that says it needs additional time to complete its year-end filing because it experienced a delay in preparing its annual report and audited financial statements. So because eHang had just been shorted by the Wolfpack Research, accusing them for cooking the book, committing fraud, and now that the company needs additional time to prepare the financial statement, does raise concern for investors because they did not give out reasons specifically to justify why they need additional time, why they're delaying it, and it would automatically make people worry that they are indeed doing something wrong. So that's why it was a reaction to cause some sell-off. And of course, the short sellers would take the position to drive it down further, causing more drama. So should we be worried about the fact that they are really doing something wrong with the book? Well, anything right now would be speculative until they officially release the report. But for now, I can share what I think. First of all, I don't think that it is likely for most of the Chinese companies to commit fraud after what happened with Luckin Coffee last year. So it was April 3rd, 2020 that Luckin Coffee admitted to sales fraud. And that was a big alert, not just to Luckin Coffee, but also to a lot of the Chinese companies at the same time, because they should know that they would be checked much more attentively than before, especially by short sellers who are aggressively looking closely on many Chinese companies since last April, taking advantage with what happened to Luckin Coffee. So that was April. So I think most of the deals and reports done after April last year, I would expect a lot of the Chinese companies to be much more careful and would put more attention to details than before. But anything that happened in the first quarter of 2020 before April, I'm not sure if they were putting enough attention to it to be careful enough. But I don't think at this point eHang is at the stage of cooking a book, because they're only selling very limited amount of drones, especially because they haven't got the certificate yet. So whatever they sell is for demo purpose or for the first experience from distributors. So it would be quite easy to manage, and it would be really surprising for me for them to cook the book right now at this stage. Because what is the goal? What is the purpose? To drive up the share price like this? Like, what is the purpose to blow up the sales and then drive up the share price? The insiders, the management, did not sell a single share during the whole run-up, and it's not even like they had released new share offering to raise more fund, because a lot of companies would take advantage of the run-up of the share price to raise fund, but they didn't even do it. So what is the whole intention behind blowing up the sales? And we know that the CEO, Mr. Hu Huazhi, he has the engineer background and is quite deep into the technical of the products, research and development. And I guess he might have a weaker side on financial and marketing and sales network, etc. And also, there's something we need to know about investing in Chinese stocks. Is that I think overall in the Chinese culture and the Chinese education, I've always thought that the efforts of law education, it's not enough compared to a lot of Western countries. So there's definitely lack of law consciousness. And that is exactly why a lot of the short sellers take advantage of that and can find some details for more deeper accusation by blowing up some details that they were missing or not careful enough, like some errors in paperwork, or last time I showed you there's the mistake of translation that blow up the number by 100 times. So this kind of mistake, I think it comes from the lack of attention to detail and the lack of law consciousness. I think this is in the Chinese culture and education, so that's why it's easy to take advantage of. So when it comes to be listed in the American Stock Exchange, following the American laws of SEC, following American laws, regulations from SEC, there is really quite some learning to go and awareness to raise. But at the same time, they also have a chief officer, Edward Xu, who had worked before at Morgan Stanley Asia, and we should expect he has more awareness of dealing with the American laws and regulations. So I really hope they can come up with the SEC filing for the earning report soon, and I hope to find out the reason for the delay to be something like a mistake or error, and can help us clarify eHang from the accusation of the Wolfpack research. And I also think because a lot of people, a lot of investors and the short sellers like the Wolfpack would be looking with the magnifying glasses on every single detail on the earning report. So that might be one of the reasons why they are delaying it. And if that's the case, then I really think the big sell-off these days would be really an exaggeration and overreaction without knowing anything particularly wrong, but speculating at this point. So that's it for today. I want to share with you what I think. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.